Yeah, so, it's been interesting. This has been a really difficult year for investors in FX markets. And one thing that you've seen is a change in behavior where every investor is basically now just looking at the next event and only trading up to that. So even the longer-term focused investors historically that are thinking about next year, 2 years down the line, they're all just kind of trading the same way that hedge funds do, which is just what's the next catalyst? We'll trade up to that, and then we'll switch over to the next catalyst after that. And now that we're moving past a lot of the U.S. data, the next thing that should obviously come onto radars is the U.S. election. And from our perspective, it's a really close call. It's basically 50-50 at this point. And what that means is that the market hasn't really been pricing in any premium for tariffs under Trump. So normally in a 50-50 situation, you would still see the market price in some probability of the policies that could impact the currency. In this case, specifically tariffs, and to a certain extent, some fiscal policies as well. These are dollar positive from the Trump side. On the Harris side, we don't really think that there will be that much of an impact simply because it's unlikely she'll get the Senate. And so most of the policies she's talking about probably won't have much of a market impact. But the key thing for us is whether Trump wins or not, there's no real premium priced in for him, and there should be going into November.
Okay, so Dan, Shri and I were just talking about this, right? Tariffs, if it comes to that, end up being, no matter what the MAGA people say, right, a tax on the U.S. consumer, right? And that could potentially be inflationary. I get that. But if, and correct me if I'm wrong, last I recall, during Trump 1, his first term, dollar was actually weaker throughout, was it not, those 4 years? And that was largely because he was viewed as wanting a softer or more competitive dollar because he was trying to push manufacturing. Has that story changed?
Well, first of all, I would disagree with that take in terms of what really drove the dollar during that time. And you have to remember that the period of dollar weakness that we saw was really a lot more linked to the fact that the Fed was actually cutting rates at that point in time more than the market was looking for. And so that was a part of that driver. If you zoom into the period when we were thinking about tariffs specifically, we did see the dollar rally against the currency where the tariffs were being implemented against, right? So dollar China during these trade wars and tariff discussions did move higher. This time around, we expect more broad-based tariffs if they are to come, and that's something that former President Trump has discussed, 10% broad across the board tariffs, and that's why we think currencies like Euro, Taiwan, Korea, et cetera, could also come under pressure this time around. So I think that's an important consideration, right? It's hard to look at a 4-year period and say that was all this one factor. I think you need to zoom into the periods when that was what was topical for markets. The other thing I would say, so this soft dollar policy dynamic, it's really interesting, right? I think if you read Robert Lighthizer book and hear his commentary, and he's really the one leading this charge, it's really specific to dollar China and dollar yen. I think on the dollar yen side, I think that that's not necessarily something that there would be that much pushback on. I think, we saw the Ministry of Finance intervening this year to help strengthen the currency. But even then, it's unlikely that we'll see any policies that really, really push markets in that direction. Same with dollar CNH. It's going to be really hard for the U.S. unilaterally to really have any impact on the currency. So I think that you'll hear a little bit of that language. But we did also hear that language, in 2017, 2018, 2019. And again, it had mixed results. So I don't think that just the commentary of wanting a weaker dollar gets you a weaker dollar when you're actually putting policies through that are stronger dollar.